time, or?
That's a really good question. So, as you know, a lot of the trading that I'm doing is revolved around Elliott wave theory.
Right.
So a lot of it is going to be based on going to higher time frames, or lower time frames really, and trying to identify the wave count that we're currently in. So let me share my screen with you.
And I'm in Apple and Ford swings right now that should be printing me bags this morning.
That's fucking awesome. Oh yeah. Oh my god.
Yeah.
Yeah, that's awesome. Okay, cool. I was telling everybody Ford swings were the good idea, but they talked me out of it. Good job for getting on in though. Okay, so let's go to a higher time frame. Just throw me a random ticker, or we could do Ford, whatever.
Yeah, that's fine.
Okay, so I'm just gonna go to the higher time frame and see the impulse wave that we're currently in, right? So obviously this is the impulse wave we are currently in. Yep. Then I'm gonna try to identify my waves, just because that's always gonna be the first thing I'm looking for. So I can count a clear wave 1 here, wave 2, wave 3, wave 4, wave 5, you know?
Yep.
And then using this context, I'll see, okay, are we done the wave that we're in, or are we still in the wave? By doing that, I'll use my fib extensions. So this is one example, obviously. I can take the fib extension from wave 3, from the high of wave 3 to the low of wave 3 to give me the extension to the high. And then that gives us, obviously, these fib levels, 22.12 and 31, call it 32. And then we can, utilize another couple of confluences, but just going back through it, we're obviously on a pretty high time frame. We're on the daily chart. So this is going to give us an idea of the higher time frame trend. So we can use this to find a fib cluster. This is the trend-based fib extension tool. I don't know how familiar you are with that.
I'm somewhat familiar with it for sure.
Cool. Well, it's essentially we draw it the same way, except with this fib tool, you also count the corrective wave. So the wave 4 in this case.
Okay.
And then that gives us, a fib cluster that we can now rely on as a take profit zone.
Right. So with what you have presented here, I should be taking profits around literally probably pre-market essentially.
You could take some off, leave some runners, but like a lot of the times you'll see maybe we could even get to the high of this zone. And if we print to 23.60, that would be an additional nice bit of profit for you, I'm sure. So
yeah, I have 7 contracts right now. They were super cheap, so I bought 7 of them.
Nice. Yeah, I mean, see how much you're up when the market opens in 45 minutes, but I would still leave some runners because we could go to the high of this zone.
Okay.
And then also remember, that's not the only confluences that we have. So within the Elliott wave framework, we know we can drop down to a lower time frame and have to count 5 waves in wave 5 in order for wave 5 to be done. So I would say it's pretty obvious we're in wave 5 of wave 5 right now.
Yeah.
But, we could count this as wave 1 maybe, wave 2, wave 3, and wave 4 here, because this obviously looks like a corrective wave.
Yeah.
So then this would say, okay, we are still in the wave. Now we can also use this as confluence, because now we know where this wave 3 ends. And now we know, there's an even higher probability zone from here to here.
Right. So question on what you just did. Why didn't you draw the fib all the way down to the base there?
Because when I'm looking for wave 5 take profits, I'm only for the most part looking for a wave 3 extension. So I'm drawing it from the high of wave 3 to the low of wave 3. Does that make sense?
Okay. Yeah, no, that totally makes sense.
Awesome, yeah. But for the most part, when you use wave 1, it doesn't work as well because you're counting on the last 3 waves rather than just the last wave.
Okay.
Yeah, so that's why I'm using wave 3. I find that this works better for me.
Yeah, it's just a little more accurate, I'm assuming.
Yeah, exactly. All fib levels are going to have some relevancy, of course, but that is what I find to be the most accurate. And then, I'm essentially going from, remember, we were on a higher time frame. We were on a daily chart, identified this macro trend. Now we could even drop down to a 4-hour chart and continue to drop down, counting out our waves, making sure that everything is still valid. But now we have the main idea where we know we're in a bullish trend, and we know that we're going to find some resistance around this level, especially from the upper half of this box, because there's another 127.2 extension just around here. So just taking in market context, this is what people refer to as the top-down analysis, starting on a higher time frame, moving our way down. Because now that we're on a 4-hour chart and we know we're in wave 5 of wave 5, broke that down farther, we could go into a 1-hour chart and start to count it out as well. Or we can start to find other levels that may prove for us to reverse around. We find divergence on the 1-hour chart or whatever it may be. We could look, I mean, like, honestly, it doesn't even look like wave 5 is over yet. We could probably see, maybe we see a pullback when the market opens because we just hit the 127.2 extension of wave 1. Just to give you another idea of what I'm looking at. 1, 2, 3, 4, 5. Complete wave 5, and then move lower. And then if you were doing this properly, you'd change the, the degrees.
Right.
But yeah, does that kind of make sense? Just trying to get as much market context as possible, starting from the higher time frames, identifying where we are in the trend, and then breaking it down from there to see where we can capitalize.
Yeah, that makes sense.
Awesome. So yeah, I mean, do you want to? If you would want to, you could take some profits off when the market opens and leave some runners. I don't know how much you're going to be up. Probably a good bit, right?
Yeah, I was up 5% at close yesterday, 6%.
Nice. So you're probably well over 10, maybe 15 now.
Yeah.
Yeah. Awesome. Okay. What else?
So are you comfortable, say, like going to NVIDIA, deleting everything off your chart, and then going through it? Or it doesn't have to be NVIDIA. It can really be whatever stock you'd like. If there's one you're looking at this morning, we'll go with that.
We could do NVIDIA. Do
Lucid. I heard Lucid's on a tear.
Oh, Lucid. That's my baby, bro. Okay, I'll delete it. Okay, we'll just delete all this. Okay. We'll even delete the alert so we don't know it's there. Okay. So yeah, remember we're going to a higher time frame. In this case, we'll start on the 4 hour just because we see the start of this impulse wave is right here.
Right.
So we see the impulse waves right there. What wave count can you identify here?
So I'm going to say it's on wave. I want to say it's wave 3.
Wave 3 is done.
Okay, so bottom is 1, obviously, and then 2 to the top of it. 3 down. Oh, that's the one. That makes more sense now. Why do you put the 0 down there? You start at 0 rather than 1?
Correct.
Okay, so then 2, 3, 4, and now we're going to make wave 5?
There you go. Yeah. That's exactly what I'm saying.
Okay.
And then as confluence for this, you can see, okay, in wave 3, this isn't a requirement, but we have more confidence in our wave 4 being complete when we get to this reversal zone that me and Austin are always talking about, the 38.2 to the 61.8 reversal zone right here. Right? So if we got to this zone, that's an extra confluence for us. So we did. Very nice. And then obviously from here, we can drop down to a lower time frame and start to see what we see here. So we can start to see, is this wave 4 done, right? So we can see wave 5 ended right here, wave 3 ended right here. And then we have an A, B, C correction. So it does fulfill that requirement. And then if we wanted to, we could break down, the individual waves. So, I mean, that'll probably come later. But as you can see, wave, we'll just do it really fast so you can kind of get an idea. But in wave A of a subdivision, we need to have 3 waves, right? So A, B, C, that suffices wave A, right? Same case for wave B, A, B, C, right? And then
so on and so forth.
C. Exactly. You get it. So
can you just use Elliott wave theory as a good justification for like entering a long-term trade?
Oh, definitely. I would say that like Fibonacci and Elliott wave are one and the same. Like you would have to utilize them both. But yeah, if you were looking at like a long-term swing, you could definitely do that.
Chase is getting some free education in here.
Who is?
I know who. A couple people now.
Oh, cool. Yeah. So then at this point, we'll identify. Now that we know we completed our correction, we got wave 4 down here. We're in our 38.2 to 61.8 retracement zone. We can see what are some price action indicators that tell us that this is a area that we can look to potentially get into, right? And that comes down to price patterns, things like that. So, we could obviously, there's a zone right here. I don't know if you and I have gone over how I draw support fractals, but how I draw resistance and support fractals is by finding a large wick that has not been preceded by 2 candles to the left or to the right of it. So for this example, we'll use this one right here, this long wick on the 5th of November. And you can look 2 candles to the right. There's no lower low that the wick makes. And then 2 candles to the left, same case. So I draw the zone from the high of the wick to the low of the wick. and then you can just move it all the way over to the right of your chart. And then
Yeah, so I watched your intro to technical analysis OBR videos on YouTube.
yeah,
So I do remember you specifically stating that, and I actually have it written down here in my notebook too.
awesome. Yeah, so that's what I'm using, and as you can see, that worked out really, really well.
Right.
Got a fake out on the 1 hour right here, but just quickly rebounded. And then these are valid for me until they're broken 2 times. So let me see if I can find an example. Yeah, this is an example right here. This one, I mean, obviously we gapped beneath it, but it broke here, and then it broke here again on 2 gaps, funny enough.
Right. So since it broke on those 2 gaps, would you be able to consider that possible resistance on the way back up?
No, I think that that's invalid because it broke it through twice.
See, that's what I thought as well, but I wanted to make sure.
Yeah, yeah.
So then you could still use this level, essentially that we're on, as some sort of resistance.
The one like you're looking around price right now.
Yeah.
So you tell me what you're seeing. Point me to a candle.
Yeah. So to your, I guess I go further. I was saying these candles right here to your left, but one to the right or 2 to the right and 2 to the left go further on those. So you definitely couldn't use that zone.
Okay. Well, yeah. Okay, we'll keep going. I'm not sure I see what you see yet, but we'll keep on going. Another one that I see very clearly, and this is the one that I'm looking to play off Lucid right now, is this level right here. So you see this doji candle right here. This formed a wick, not preceded by 2 candles to the left or to the right. And then we actually came back up to test this 2 times so far.
Okay. So you're expecting a bounce off of that area then?
Yeah, exactly. Because we'll get into it in a second, but this is textbook Elliott wave. So
right.
We finished our corrective wave here. We obviously finished our corrective wave here for wave 4, and then what happens after a corrective wave?
Impulse.
Exactly. We go back into our 5-wave impulse move. So we have wave 1 here, wave 2, wave 3, and this is a micro time, like a micro structure. This is not necessarily our higher time frame count. It's not, but this is what we can see in a lower time frame. And as we just went over, there's subdivisions on everything. So by confirming this is confirming our macro trend to the upside on a higher time frame. So we have wave 3 here, off of this low. This also lines up the way forward line up, bouncing off of this resistance, now acting as support zone. And then we could also use our fib retracement tool and extension tool, where we can start to identify where we might find a low exactly, or within the zone, obviously. And then also our take profits for wave 5. So right here, I'm going to be looking at this zone in particular. A lot of support right here, even right down to here. And the only reason I am not using the entire 38.2 to the 61.8 right here, which would be here. I'm using this because in order for this wave count to be valid, we cannot have wave 4 end in the price territory of wave 1. So wave 1's price territory is right here.
Right.
And also, I find this zone is a little bit more higher probability than if we used the entire 31.8 to 38.2 to 61.8, because of the fact that we're in the high. This is the 38.2 resistance on the macro time frame. This white line, that's the high of our zone, and also obviously this support level, plus the 38.2 being right here.
Right.
Does that make sense?
So for this instance with Lucid, then when we come down, if we bounce off this support, you're entering right when we bounce, essentially.
Correct.
Okay.
Yep.
And is that sort of the same strategy that you use for most of your trades? Is you wait for the impulse waves, obviously, and then Elliott wave theory and find support and resistance and do it just like this?
Exactly. But the exact entry might look different. Like sometimes we've been getting a lot of inverse head and shoulders recently, where like
AMC.
AMC was an example. I mean, there was an example on Lucid right here. Right?
Oh, okay, yeah, just a smaller time frame.
Exactly. Left shoulder, head, right shoulder. So this would have been a great entry. Why? Bouncing off this support zone we had, plus in the 38.2 to the 61.8, break of this neckline, or the bounce even, would have been a great entry.
Perfect.
Yeah, so it's sometimes it's a bounce like this will be, or if we drop down to a 30-minute chart and I identify there's inverse head and shoulders, there's a wedge, whatever it may be. There's price pattern that will break out. That will be my execution for that particular case. Does that make sense?
Okay. Yeah.
Awesome.
This literal 15 minutes that we've been in here, you've helped me tremendously. I just had like little questions that will help me define my trading style and things like that, and you've helped me a lot.
Awesome. Yeah, so we can go through any more questions you have, but also if there's something here that, trading's different for everybody. So you could take some things from here, you could take some things from Clayton's strategy and combine them all, or, something that you find on your own. This is just particularly how I go about it, and Austin as well.
Right. Well, you guys are obviously highly profitable with it, so if I can replicate it in a way that's my own and make it profitable as well, that's what I'm going to do.
Yeah, exactly. I mean, you'll learn over time if you lean more towards day trading or swing trading. I think from your results so far, it seems like you're having a great time day trading and scalping. So maybe stick with that for a little bit and try swing trading at a later time or whatever it may be.
Yeah, that's what I think I'm doing, but to be honest with you, I'm trying to broaden my horizon in every aspect, which
Yeah.
I know that's probably a lot to do. Don't get me wrong, but I'm going to spend the time and make sure, because I hate working 80 hours a week.
I would also hate that. What is it that you do?
So I work for the state. My technical title's selection specialist manager. I look over 23 different samplers and 18 different vehicles in 7 different states. We test cannabis for the state.
Got it.
Yeah.
When you test it, does that mean you're sitting in a room getting stoned to the bone, or are you testing?
No. I'm testing it with a high proficiency linear chromatogram, a gas chromatography chromatograph. Like these are big pieces of equipment.
Yeah.
Send me your Snapchat, and I will send you some videos and stuff of our lab equipment. It's pretty sweet. It's a unique experience. It's something you're not going to see everywhere.
For sure. I was going to say, that doesn't sound like a bad 80 hours.
Well, yeah, no. If I was sitting here smoking 80 hours, sure, but no, it's not like that at all.
Cool. Well, so we could get into the other call on time. Do you have any other questions for right now?
No, I don't. I really appreciate you, Logan. Seriously.
Absolutely, bro. I'm glad that we could get it done.